Imagine waking up one day, checking your bank balance, and realizing that your money has grown overnight, without you lifting a finger. Sounds too good to be true, right? Well, today I'm going to show you 5 simple, smart ways to earn interest on your hard-earned money. First, switch to a high-interest savings account. Various banks help you open a high-interest savings account, where you can earn better rates than a normal bank account. One of the best places to look for high-interest savings accounts is an online-only bank. Online banks, which save a significant cost by not having to maintain branches, rarely charge monthly fees. They also usually offer rates that are much higher than those paid by your traditional banks. The best high-yield savings accounts offer you an annual percentage yield, APY, of 5.35%, which is around 10 times than the bank rate national average rate. For example, if we base these two rates, if we deposit $10,000 into one bank account that earns the top yield and another that earns the national average, you would be able to earn interest on account this way. Interest on an account that earns 5.35% APY, $550. Interest on an account that earns 0.58% APY, $58. In this way, you would be able to get around $550 more than usual by going with the high-yield savings account. 2. Consider a rewards checking account. Some banks offer rewards on checking accounts, which may earn cash back on things that you buy with your card. Those who make frequent purchases using a card would benefit the most from this type of checking account. Other rewards checking accounts would pay you higher interest rates, although the balance that you'd earn would be based on the increased rate that is usually very limited. For that, you also need to jump via some hoops to earn the bonus rate. 3. Consider spending in certificates of deposit. Certificates of deposit, CDs, usually offer higher interest rates as compared to the traditional savings accounts. But there's less flexibility when it comes to withdrawing your money from a CD. For instance, when you decide to put your money in the account for a particular period of time, which is called the term, you need to understand that you'd be unable to withdraw your money before the term, and if you do so, you would be charged withdrawal penalty. Another benefit of CDs is that you lock in the interest when you open the CD. Even if the market rates drop, you will still keep the money you earned at the same rate. On the contrary, if the rates rise, you'll be stuck earning the lower rate until CD matures. 4. Build a CD ladder. Imagine having a strategy that not only helps you grow your money faster, but also gives you regular access to it without penalties. That's exactly what a CD ladder does. It's the perfect balance between locking in higher interest rates and maintaining flexibility. Here's the deal. Instead of dumping all your savings into one long-term CD, you spread it across multiple CDs with staggered maturity dates. For instance, if you open a 1-year CD every month for a year, by the next year, one will mature each month, giving you access to cash without the worry of early withdrawal penalties. According to Bankrate, the average 1-year CD rate is around 4.75%. But if you opt for longer-term CDs, you can earn even more, sometimes over 5%. It all depends on how often you want to access your money and how much interest you want to earn. For example, a 5-year CD ladder would involve buying 5 CDs with different terms: 1 year, 2 year, up to 5 years. This way, one CD matures each year, and you can reinvest the funds at a higher rate or keep them. It's a smart way to ensure your savings grow steadily without sacrificing liquidity. 5. Take advantage of bank bonuses. Who doesn't love free money? Banks know this, and that's why many of them offer enticing sign-up bonuses to get you to open new accounts. And we're not talking pocket change. Some bonuses range from $200 to as high as $500. Here's how it works. Most bank bonuses require you to set up direct deposit or keep a minimum balance for a few months. For instance, some banks offer up to $300 if you deposit $10,000 into a savings account and maintain it for 90 days. Essentially, that's like earning a 3% annual percentage yield, APY, for just holding on to your own money. And if you're willing to shop around, some banks offer even bigger bonuses, up to $500, but with higher minimum deposit requirements. Just be sure to check the fine print. Some banks will charge fees if you close the account too early or don't meet certain conditions. But if you play it smart, you could easily boost your savings just by switching accounts. We are not financial advisors or experts. These videos are for educational purposes only. Investing of any kind involves risk. This channel is designed to make financial education accessible and fun for everyone, kids, teenagers, and young adults. Whether you're starting your money journey or just looking to sharpen your financial skills, these videos are perfect for you. Share this video with your friends, family, or even your kids, and help them build strong money habits for a brighter future. So, whether you're looking to slowly build your wealth with a CD ladder or snag a quick bonus from your bank, the bottom line is this: your money should be working for you. And now, you've got 5 solid ways to make that happen. But here's the thing: knowledge is great, but it only works if you act on it. Don't just sit on the info you've gathered today. Pick one of these strategies and take your first step. Your future self is going to thank you, trust me. And hey, if you've got other tips or personal experiences on how you're earning interest, I'd love to hear them. Drop them in the comments below. Let's share the wealth, literally. Remember, every penny counts, especially the ones that multiply. See you in the next one.